Ajinomoto first started its business in Malaysia in 1961 as monosodium glutamate MSG, distributor importer from the parents, Japan under the brand name Ajinomoto. In 1965, the company grew rapidly with the production of MSG locally and subsequently other food seasoning product in Jalan Kuchai Lama, Kuala Lumpur. Ajinomoto company mission is to be global customer-centric halal food company to contribute towards enhancing people's food and well-being through our specialties and innovative solution. For Ajinomoto company vision is bringing happiness through tastes that unite, inspiring food creativity in your life.
This is Board of Director Ajinomoto Malaysia Berhad. The first one on the top chart is Tan Sri Dato' Teo Chiang Liang as Chairman, Independent Non-Executive Director. The below of Tan Sri Dato' Teo Chiang Liang have 3 director, which is Independent Non-Executive Director, which is Cheong Heng Choi, and then Managing Director Chief Executive Officer by Richiro Osawa, and then Executive Director Chief Finance Officer by Shunsuke Sasaki. And the below of these 3 person have 3 director more, which is Norani Binti Sulaiman as Independent Non-Executive Director, Noriko Fujimoto as Executive Director, and also Elani Tan Aileen as Independent Non-Executive Director. This is all person have in charge in Board of Director Ajinomoto Malaysia Berhad.
So Ajinomoto is more than just a company. It is a pioneer in blending science, and it is a tradition to enhance flavor and health. Let's dive into what makes this company a global leader. So firstly, as you can see, it's a food. The first one is food products. They're known for their MSG seasoning, umami in a bottle, along with instant noodles, frozen meals, and healthier food options. They prioritize flavor while reducing sodium. So the second one is amino acids. They use advanced technology to produce amino acids, which are vital for protein supplements, special diets, and even animal health. And then the third one is pharmaceuticals. Ajinomoto develops amino acid-based medical solutions, from treatments for disorders to hospital nutrient, combining science with healing. And the fourth one is the sustainability. They focus on eco-friendly innovations like turning food waste into fertilizer and reducing energy use in production. And the last one is culinary partnerships. For example, they support chefs and restaurants with custom seasoning and expertise, making dining experience unforgettable. And then through these activities, Ajinomoto blends innovation, health and sustainability, setting an inspiring example of how a company can lead in multiple industries while making a meaningful impact on our life and planet.
Ajinomoto Malaysia Berhad, established in 1961 and headquarters in Kuala Lumpur, is a subsidiary of Ajinomoto Co. The company is primarily engaged in manufacturing and distributing seasoning and food product in Malaysia. In 1973, it expanded its operation by establishing a subsidiary, Ajinomoto Singapore, to promote and distribute Ajinomoto product in Singapore market. This subsidiary offers a variety of products, including seasoning, frozen food, processed food, beverage, sweetener, and amino acid for both consumer and industrial markets. Additionally, Ajinomoto Singapore performs vital functions to support the group global operations, such as the procurement of flexible packaging material, chemicals, and raw material to provision of logistics solutions and developing new businesses in the region.
Okay, for Ajinomoto's achievement, Ajinomoto has been transforming food, health, and sustainability for over a century. Let me highlight their key achievements. Okay, for the key achievements, example like umami discovery. Dr. Aikida's discovery of umami revolutionized how we flavor food, making meals more enjoyable. And then advancing nutrition, Ajinomoto leads in amino acids, enhancing sports nutrition and medical treatments. And for the global reach, products like instant noodles and seasoning are now loved in 130 plus countries. And for the sustainability efforts, turning food waste into fertilizer, cutting emissions, and using renewable energy. Healthier living. For the healthier living, low sodium products and partnerships to fight global malnutrition. And then for the supporting chef, collaborating with chef to elevate dining experience worldwide. So for the Ajinomoto's achievements show how innovations, health, and care for the planet can create a better future.
For financial analysis, I will explain to you about liquidity ratio for Ajinomoto company. There are two types of liquidity ratio, which is current ratio and quick ratio. Current ratio is a company accounting liquidity that can be determined by looking at its current ratio. Referring to the figure above, we can see that current ratio for Ajinomoto company is decreasing, where we can see in March 2020 until March 2023, there are decreasing graph shown in the figure, where it's increasing in March 2024. It indicates that company may not be efficiently using its current asset or its short-term financing facilities. This may also indicate problem in working capital management. We are moving forward to quick ratio. Quick ratio, also known as the acid test ratio, is a liquidity ratio that measures the ability of a company to use near cash asset to extinguish or retire current liabilities immediately. It is the ratio between quick assets and current liability. Based on the figure above, the quick ratio has the same trend as a current ratio. We can see that the quick ratio also decreases in 2020 until 2023 and it increases in 2024. It indicates that the company is over-leveraged, struggling to maintain or grow sales, paying bills too quickly, or collecting receivable too slowly.
Okay, for the activity ratios, Ajinomoto in 2023, activity ratios help us understand how efficiently a company uses its resource. For Ajinomoto, these ratios in 2023 highlight its operational strength. So for the key ratio and insights, inventory turnover, Ajinomoto managed its inventory effectively, maintaining a high turnover. This minimizes excess stock and cost. For the account receivable turnover, the company collected payments quickly, reflecting efficient credit policies and steady cash flow. And for the total and fixed asset turnover, Ajinomoto used its assets, including long-term investment like plants and machinery, effectively to drive sales. For the working capital turnover, efficient management of short-term resources supports smooth operations. So the conclusion is Ajinomoto's strong activity ratios show excellent resource optimization and operational efficiency, position it well for growth in competitive markets.
Ajinomoto company maintained as a prudent approach to financial leverage, effectively balancing debt and equity to support its operation and growth. As you can see at the table, debt to equity ratio, this ratio indicates the proportion of debt financial relative to shareholder equity. A lower ratio suggests a more conservative capital structure with less reliance on debt. For interest coverage ratio, this ratio measures the company's ability to meet its interest obligation from operating earnings. A higher ratio indicates a stronger capacity to cover interest expenses. As of March 21, 2024, the interest coverage ratio stood at 34.8 times, indicating a strong ability to cover interest expenses with operating income. This figure demonstrates Ajinomoto prudent financial management, maintaining moderate debt level and a strong ability to service interest obligation.
Hi everyone, today I will explain to you guys about profitability ratio. Profitability ratio is a financial indicator to assess a company's capacity to produce profit, its relation to revenue, asset equity, or other financial standards. This ratio offers valuable insight into the operational efficiency of a company and its effectiveness in transforming resources to profit.
The first one is gross profit margin. Ajinomoto is primarily involved in manufacturing and selling food, seasoning, and also other products. The gross profit margin reflects how effectively the company balances product costs like raw material and energy with the pricing of products. From the graph, the data indicate a significant drop in 2023, followed by a rebound in 2024. The increases in gross profit reflect the company effective cost management and operational efficiency. Is net profit margin. Net profit margin for Ajinomoto Malaysia shows the percentage of revenue the company retains as profit after covering all expenses such as production costs, operating costs, taxes, and interest. For example, you can refer to the paragraph. Over the past 5 years, the margin declined from 12.96% to 4.32% in 2023, but the margin going up until 63.7% after the previous year. It means that a higher margin suggests the company is more profitable and better at controlling its costs, while a lower margin may indicate challenges in managing expenses or lower profitability. After 2023, in 2024, the percentage of net profit margin is growing up until 63.7%. It means the higher margin suggests the company is more profitable and better at controlling the cost, while the previous year have the lower margin. So Ajinomoto Malaysia have to challenging to managing expenses and lower profitability. Number 3 is return on asset, ROA. Ajinomoto Malaysia Berhad has experience in return on asset, ROA, in recent periods, highlighting variation in the efficiency of its asset utilization. As of December 2024, the reported ROA stands at 4.71%, indicating that the company generate the higher price RM 0.0471 in net income for every 1 ringgit asset. Is it essential to recognize the ROA can vary due to multiple factors such as charge in net income, the asset base, and extraordinary gain or loss. For example, a notable gain from divestment in the fiscal year ending March 31, 2024 significantly boosted net profit, thereby affecting the ROA for that period. Is return on equity, ROE. Ajinomoto Malaysia Berhad has experienced notable variance in return on equity, is ROE, over the past few years, indicative of shift in the company profitability and equity structure. For the fiscal year concluding on March 31, 2024, the company achieved an ROE of around 55.25%. The remarkable rise is largely due to a considerable gain from divestment during the period, which significantly boosted net income.
Okay, here we are for the conclusions. Ajinomoto's 2023 performance highlight is operational efficiency and strategic resource management. The company excelled in key areas like inventory turnover, receivables collection, and asset utilization, demonstrating a balanced and effective approach to operations. These efforts have positioned Ajinomoto strongly in the food and biotechnology sectors, ensuring competitiveness and preparing it for future growth. In conclusion, Ajinomoto's results reflect a well-managed, resilient business poised for continued success.